How do I track my sales? Do I need to open a business bank account? How do I handle expenses? What about taxes? What if I mess something up? If those questions are holding you back from starting your digital product business, come here. You're overthinking it. The financial side feels scary, but it's actually way simpler than it looks. And today I'm going to walk you through a super simple financial system so you can finally start without the overwhelm. Okay, grab your notebook because we're doing a quick financial crash course today. We're going through separating your money the right way, tracking income from all the places you get paid, organizing your expenses, using one tool to simplify everything, saving for taxes and future plans, and checking your monthly profit and trends. Quick little disclaimer before we get into it, I am not an accountant. Everything I'm sharing is based on my own experience as a digital product seller, but rules vary depending on where you're located, so please double check anything you're unsure about with a licensed professional. Now, before we jump into step 1, I want to clarify something I get asked all the time. Do I need to register my business before I start selling digital products? The short answer is no. You don't have to set up a corporation right away. I'm going to share the 2 ways you can set up your business here in Canada since that's where I'm based, but this concept works similarly in a lot of parts of the world. Just make sure to check your local laws to be sure. Option 1 is being a sole proprietor. This is the easiest, most beginner-friendly setup. Think of it like this. You and your business are basically the same person. So any money you earn from selling digital products just counts as your personal income. At tax time, you simply add it to your personal tax return as self-employment income. Option 2 is creating a corporation. A corporation is like a separate person. The corporation makes the money, pays the bills, and then pays you a salary or dividends. Kind of like you're working for your own company. People usually choose this once they're earning more because corporations can save you money on taxes and give you more protection and flexibility. But the trade-off is that it comes with more work, bookkeeping, corporate tax filing, setup costs, and ongoing maintenance. So my advice is if you're just starting, a sole proprietorship is perfectly fine. You can always incorporate later once your income is stable and the tax savings actually make sense. No need to overcomplicate things when you're just beginning. Hence, a lot of the things I'm explaining in this video are for beginners. All right, now that we've cleared that up, let's jump into step 1, which is separating your money. This is one of the most important things you can do when you're starting a business. When your personal and business expenses are all mixed together, it becomes almost impossible to see what you're actually earning, what you're actually spending, and whether your business is even profitable. If you're operating as a sole proprietor, this is super easy. You don't need a special business account. You can literally just open a separate bank account at whatever bank you already use. That's it. And once you do this, you can finally track what's going in and out of your account. You're not digging through your personal transactions during tax season, and you get a much clearer picture of how your business is actually doing. Step 2 is to track all your income streams. If you're selling digital products and you're still a beginner, you're probably only selling from one place right now. That might be Etsy, Payhip, your website, Gumroad, whatever platform you chose. And this is actually great because it keeps everything super easy to manage. This is where having that separate business bank account becomes so helpful. All your payouts go into that one account and you can clearly see all the income coming in without it getting mixed in with grocery runs and Uber Eats orders. Everything is clean and in one spot. Now, if you eventually expand and start selling on multiple platforms, having all your business income flow into that same dedicated account means you can still track everything with one glance. And from there, you'll start to see patterns, which platforms bring in the most revenue, which products are performing the best, and where you should be focusing more of your time. The key here is simple. Your income needs to be recorded somewhere so you always know what's coming into your business. You never want to be guessing your numbers. Later in the video, I'll show you how I track all of this in a way that's automated and beginner-friendly so you're not stuck figuring this out manually. Step 3 is to organize your expenses. When you start running a business, you're going to have little expenses here and there. And these are completely normal. These are things like your Canva subscription, monthly fees for the platform you're selling on, ads you run for your products, stock photos or fonts you purchase, and even education you invest in, like courses or workshops. And fun fact, if you bought the vault, that can also be considered a business expense as long as you're using it for your business, which most sellers do. All of these count as business expenses, meaning they're costs you pay in order to run your business. Now, if you're selling on Etsy, some of your expenses like listing fees, transaction fees, and Etsy ads are actually deducted before your payout reaches your bank account. So it might feel like you're not paying them because the money you receive is already clean, minus all those fees, but those fees are still considered business expenses. Etsy just takes their cut up front. And the nice thing is you don't have to track those Etsy fees manually. Etsy gives you a year-end report that already shows your total revenue and total fees, so you can use that when it's time to file your taxes. And here's why all of this matters. When tax time comes, business expenses can usually be deducted from your total business income. Explained simply, if you make $1,000 selling digital products and you spend $200 on tools, subscriptions, or supplies for your business, you don't pay taxes on the full $1,000. You only pay taxes on what's left after your expenses. In this case, $800. This is also why having a separate business bank account is so important. When all your business-related charges come out of one dedicated account, it's so much easier to see what you're spending and stay on top of everything. And just like your income, your expenses also need to be recorded somewhere, so you always have a clear picture of what's going out. Now, at this point, you might be thinking, okay, Yale, this is starting to sound like a lot to keep track of. And honestly, same. That's why I don't do this manually. And this is the part I'm really excited about because this segment is in partnership with Xero, which also happens to be the accounting platform I've been using for years. My accountant uses Xero, so naturally it became the tool I use in my business too, and it has genuinely made managing my finances so much easier. Now, if you're new to Xero, it's a cloud-based accounting platform designed specifically for small business owners. And the reason it fits so perfectly into what we're talking about today is because Xero basically helps you automate the financial side of your business without spreadsheets, manual data entry, or trying to track things in multiple places. One of the biggest features for beginners is bank connections. Xero connects your business bank account and automatically pulls in your transactions for you. No more copying and pasting or guessing where money went. Everything shows up in one dashboard, which makes step 1, step 2, and step 3 1,000 times easier. It also tracks your income and expenses in real time, helps you stay on top of cash flow, and makes tax time way less stressful because everything is organized and categorized throughout the year. No backtracking, no scrambling for receipts, just clean, accurate data you or your accountant can access anytime. And if you're selling on Etsy like me, Xero actually has a free Etsy integration. You can connect your shop directly to Xero and it automatically syncs your sales, your fees, and even your tax information so you don't have to enter everything manually. If you want your financial system to feel easier and more organized, Xero is a tool I truly recommend. If you want to give it a try, I actually have a special offer for you. As of the time I'm filming this video, Xero is offering 90% off for 6 months when you use the link below. Thanks again to Xero for sponsoring this video. Step 4 is to set aside money for taxes. Let me give you a super simple example using Canada since that's where I'm based. Let's say you work a regular 9 to 5 and you earn $40,000 a year from your job. Then this year, you made $20,000 from Etsy selling digital products. Your total income for the year is now $60,000. In Canada, your tax rate goes up the more you earned. It's tiered. So the Etsy income doesn't get taxed on its own flat rate. Instead, it gets added on top of your regular income, and then the combined total is taxed based on your tax bracket. The more you make, the higher your tax rate can be. This is why setting money aside from every payout is so important. Now, every country has different tax rules, so I can't give you a one-size-fits-all percentage, but generally, a lot of beginners set aside somewhere around 20 to 30% of their income. My advice is it's better to save a little more than you need than to save too little. Bottom line is, don't wait until tax time to think about taxes. Save slowly, consistently, and safely throughout the year. Your future self will seriously thank you. Step 5 is to review your monthly profit and trends. At the end of each month, you just want to take a quick look at two things: how much money your business actually made, where that money came from. Because profit is not just what went into your bank account. Profit is your total income minus your total expenses. Even if you're only selling on one platform right now, checking this monthly gives you so much clarity. You start to see things like which digital products are selling the most, which months you made more or less, whether your expenses are getting too high, whether you're actually profitable. A lot of beginners don't know. Once you start looking at your numbers, you naturally become a better business owner. You stop guessing. You make decisions based on what's working. You might notice, hey, this product is selling way more than the others, or maybe I should create more in this niche. You also see if there are subscriptions or tools you're not even using anymore, and you can cancel them. Little things like that save you money almost instantly. The point here is simple. You can't grow what you're not paying attention to. So give yourself 5 minutes at the end of every month to check your numbers. It's honestly one of the quickest habits that will make you feel like a real CEO. So that's your little financial crash course. Once you've set these systems up, you're going to feel so much more confident and in control of your business. And if you want one tool to bring all of this together for you, I genuinely recommend trying Xero. I've used it for years. My accountant uses it and it keeps everything organized without the overwhelm. Plus, you can get 90% off for 6 months using the link down below. Thank you so much for hanging out with me today. If you haven't subscribed yet, please do. It really helps my channel. And I'll see you in the next video. Bye!